How are you doing, folks? Welcome once again. Here we're gonna be doing some very quick time traveling in price. Yeah, I wanna predict the future. Like most of you know, it is top-down analysis. Real quick, look at this time frame. What time frame is this? Don't look at that, but just what time frame does it look like? Someone's like 1 minute. Well, I'll show it to you. Look at that, 1 month. So what I'm trying to bring out with this question is literally this. Like, to be honest, let's be real and fact. If I put, like, if there's a way I can take out this time frame, you just will look at this as, okay, this is a 4-hour time frame. Someone will say, oh no, this is 15 minutes. Someone will say, no, this is 1 minute. I would say, no, this is the daily. Like, you wouldn't really know. What does that mean? It means the same thing that happens on the monthly time frame happens on the daily time frame, happens on the weekly time frame, happens on what? On the 1 minute time frame. Yeah. So we'll be doing a top-down analysis, but this cannot undermine the importance of higher time frames bias, because everything that will go on in the lower time frame, that's from the 4-hour and down, that's like 60 minutes, 50 minutes, and all kind of minutes, and even a second, they key off from the higher time frame, the monthly, 3-month, and yearly, the 12-month time frame. So here's the British pound, and I'm looking right here at this candle, which is December, we're in month December. So we've been all bearish all along. And then November did this. November was heavy. It was promising. Okay, let me use that word. Like, it was very heavy, like as heavy as this is. That was how November was. This is December candle. This is November. This is September, October, November, December, June. So November was November was as heavy as October. Then just the last week, that very last week of November, it just squeezed up, like really. And that was like, it was so promising. Like, bro, this is a promising investment, it's a promising opportunity. And well, rock pulled. So that was it. It now pulled in. Then I was like, okay, well, I'll stick to these timelines, but I'll be favoring some longs and all those kind of things. So looking at it from the perspective of the higher time frame, that seems much like a retracement. And just a little bit of pardon, you might be hearing some whatever noise it is. It's the weekend here. I'm doing this recording on a Saturday. It's pre-market opening. So I'm telling you what will be happening going into Monday to Friday, the coming week. So it's a Saturday, and here in the city, I'm living in a very active part of the city. That's when all of them, okay, want to do this program, want to fix an engagement, want to do celebrations, and this is almost, getting to Xmas, so everybody is just, you understand? Now it's here, and everybody just is celebrating and in the mood of celebration. So I'm even in the second floor right now, and it's like it sounded like I was in the first floor, let alone if I'm outside. So just bear with me, I'm doing my best. I think my voice is dominating, so you can just listen. So here's the British pound. And the first thing I'll point out is to look at this candle, okay? This candle, I splitted the tail into two, and this tail is what you see here. That's 1 point what? Look at this. Let me take it out a little bit. Look at this level, 1.26118. That is the midpoint of that candle's tail of November. So monthly tail cut, scratch, and encroachment is the midpoint of a tail. For high probability buy side delivery, price shouldn't trade here, but traded to shouldn't exceed a 60-minute body closure. This was based on what? On the retracement, that I don't want to see price coming to trade here, and if it does that, it has to even close on the body closure above it, even as little as a 60-minute time frame. Don't worry if you don't understand, okay? You get to understand as time goes on. So unless body close below here, that was my verdict about 2 weeks ago. Until body closes below here, then I'll be confident to take a short entry. Okay, so you know what the level is right now, and we can see you can see the closing price here is 1.26202, and the scratch and encroachment, which is that midpoint, is 1.26118. So it's about very close, very close. Okay, another level I want you to take note is also this level. It's like a balanced price range. You can call it just your regular fair value gap, which is a what? Buy side imbalance, sell side inefficiency. So it's like a BC. Let me tell you what I say about it. So it's a monthly discount BC, which is like on your market, a fair value gap or balanced price range. If this gets overlapped, then its swing low at 1.20373 becomes a potential draw on liquidity. This is the swing low here. You can see here the monthly swing low. Okay, Come on, this noise is getting loud, but I think, just focus on my voice. No, I'm so sorry, I just want to get the video done right now. I got a lot of things doing. So I'll be taking this off from a view standpoint. No, I'm not trying to copy. I want to take it out. Okay. So this is swing low, and obviously this is like a long-term perspective, 6 month, like a macro sell side delivery at 1.18032. This red line over here. So quickly, I'll go to the weekly time frame. I want to make this video very, very, very fast. And so say I'll be bearish now this week. Yeah, this coming week I'll be bearish like this. No, I'm not looking for any long, because like everything set the stage up for just a retracement. Why? Look very closely. This is the CB, sell side imbalance, buy side inefficiency. Okay, you can see candle went in there, but were you able to see any candle closing above its consequent encroachment? That is the midpoint of this inefficiency, about this level. Do you see anybody closing above that? No, not one. Not this, not this, not this. 2 weeks, 3 weeks, week 1, week 2, week 3. What is it telling you? Listen to me. Let me interpret it the way I see it telling me. I'm just trying to trick people to go long right now, But look at me. I'm not closing above that. I am weak, but I am proving strong. So it's gonna go down from the higher time frame perspective. Not it must go down. No, it should, and I anticipate that it should go down. Obviously, it can go up, but really, I am bearish. There's something I love so much. Look closely. This is a trend line. Let me make it a little bit clearer. You can see that. Can you see it now? Let me do it this way. You can see this line this way, like this, on a weekly time frame. What do you call this? Trend line, right? Diagonal support. Yes, this is it. It is retail diagonal support. Look at that in brackets. Liquidity. Why did I say that? When I was learning retail concepts, they were like, okay, when you see this trend line, keep buying as it touches it. Okay. 1 buy, 2 buy, 3 buy. They've bought right now, and they're looking for what? A higher high. Okay. I have now able to learn, because then I was just losing. And why was I losing? I figured out I was actually practicing and applying flawed understanding, flawed logic. And there's no talk down on it if you make money from trend lines, no problem. But it just didn't work for me until I understand this. So this I look at as what? Liquidity, 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 liquidity. So it's giving them a peaceful sigh, like, don't worry, keep your stop loss here. We'll just keep going. Keep your stop loss at this low. Keep your stop loss here. Keep your stop loss here. We'll keep going higher. Fine. But what is it telling you on the monthly time frame? It was going almost close into that week's consequent encroachment, that tail consequent encroachment. Now this inefficiency failed to have an overlapping to the midpoint. I want to see a sell side draw on liquidity. I want to see something have a sell side delivery. And remember this inefficiency, that monthly balance price range, or BC, which I say you can call a fair value gap. Now I zoom in closer. Here it is. We have this inefficiency. Look left here. I mean this area here. Can you see that? That's a what? That's a buy side imbalance, sell side inefficiency. That's a BC. It was overlapped here, overlapped again second time, and almost getting ready to be overlapped now. On the course of the week, this inefficiency, I'll be using it once a daily, like a daily time frame candlestick closes below this inefficiency on the daily time frame. It can happen Monday, Tuesday, Wednesday. A return to it, I'll be using it as a entry, as a Q zone. If everything is in sync, like time, your model, whatever you use to view your trade, whatever your pattern, if everything is in sync, then if price is at this level, it's a very good opportunity for me to see selling short. Now I want to see price draw into this low here. I outlined a low and I can't see it well. Okay, yeah, that's a low there. That's the sell side liquidity here at 1.24873. That's sell side liquidity right there. You can see that sell side liquidity, and before that it's also this low here, sell side liquidity. So I'll tell you where I want price to go to, and I'll tell you levels that price might actually retrace to for a manipulation. When you see candlesticks this way, this is a weekly basis. Okay, you see this candle has a what? A high. Okay, where? Look at the high. You can see at the top left corner, you can see OHLC, right? OHLC. That's open, high, low, and close. This candle has a high. This candle has a high. This one's a little high. This has a. So if I want a down close candle on a weekly basis, I want to see a high form, right? Which means it will retrace to premium. So I'll be telling you how far it can retrace to, and how far it will go, that you will know that, okay, let me sit still, because we might not have a high probability sell side delivery that will eventually lead to our drawn liquidity here. Sell side at what? 1.2824873. So that's that for that. So I'll go to the daily time frame, and also I want you to take notice of something. This candle here, okay, this was 2nd of December. That week we had a closure. This week closed below the midpoint of this candle still. What does it tell you? This is the midpoint about here. here, no, not that, this. So it's what? Look at it. Previous week's tail consequence encroachment. Higher time frame should respect this level. I don't really think price should trade up to here, but for flexibility state, I allow price to trade in here. What I'm just really saying is, in as much price still want to go up, it shouldn't come here. And if it comes here, it shouldn't close below here. And if it closes below here, what happens? Will be going down. So all the, like, these are the, okay, once you're on the road, look left, look at the rear mirror, trafficate, let people know you are going to turn right or left. All these checkpoints, like on price. So if everything fails, then you want to sit still. Okay, so now if everything fails here, you want to switch your bias or sit still. I am switching my bias because I have the experience, but I'm still going to be very tolerant, waiting and watching for the end of the month of December to determine that on the monthly time frame. But I really think we might continue lower because of this weakness until a body close above the cost encroachment of this candle, of this inefficiency. Okay, until a body close above that. That's when I'll tell you, okay, we might still buy side delivery. In as much, even if it's ranging, like it's in a consolidation, and if a body does not close above that, then we're heavy. Okay, that's my take. So note this inversion fair value gap because it's overlap now. So I told you what I'll be expecting if a daily candle does that. So now, how deep can we retrace to? How deep? I don't expect too much of a retracement this coming week. Okay, but before this week, I've been telling you about this BC that it should send price higher, right? And we've been seeing it sending price higher throughout for about 1, 2, 3, 4, 5, 6, 7, 8, about 8 days. That's almost 2 weeks. We'll have 10 trading days in 2 weeks, right? So just too short of 2 weeks. And what happened now? It get disrespected. It was overlapped. So now, what would that be doing or be treated as? Now, this is what it will be treated as. I deliberately didn't make it before I came in here, so you can see how I do my levels. So I just simply extend it. 300 is the one that takes it to that level, and I change the hue from this green to about orange. So that will become what? A inversion fair value gap, just like that one I show you on the monthly time frame to send price lower. Okay, that's it. And this is the sell side liquidity. Now, look very closely. There's an inefficiency that's forming here. I'm gonna make this really fast. So this is a premium CB. Okay, this is sell side imbalance, buy side inefficiency. So that's the level price I want to reach you to. And as I proceed, there's something I want to let you know. You can see this level is actually the midpoint. This candle, the upper wick consequence encroachment, that's the midpoint of this up, like this, like a wick, not a body painting, like a wick. Okay, the upper point is the wick, the lower point is the tail. So the wick, the midpoint is this level. Okay, I'll show you something as we go to the lower time frame. And the upper quadrant of the tail, like the tail, I splitted the 4 into 4. I splitted with a Fibonacci the tail of this candle into 4 different parts. There's the upper 25%, there's the 50%, the lower 25%, and the low. So I've deleted all levels. All I need is the upper 25%, and there's a reason why I need that level. And the level is this level. Let me make it a little bit clearer. You can see it red there, right there. So that's the upper 25% of that candle still. Now, this is that weak consequence equipment that I told you just now. You can just rewind the video. The weak is the upper point. Now, do you see how body closed below it? You can see that. What is that telling you? This is the signature. Like when you're trading, you're not supposed to be looking at, okay, like I'm not trying to talk you out of leave your indicators, but to me, I have to do it because it was really impedimenting my growth. So this is the real narrative by price. So you can see body refused to close above. No single body successfully closed about 1.27765. Obviously the wicks went up above that. That's the damage, but bodies were below it. You can see that, which is telling you what? I am weak. That's it. So that's what signature is. You read other. Sorry, that's a chair I'm sitting on. It's a little bit I don't know, probably the springs, and if you hear that noise, sorry. So it's telling you that it's weak, and that's the narrative. That's the storyline the candle is telling you. Like other flow is telling you I am bearish, I am weak. This is, remember, the upper portion. That level, I'll be telling you what it means on the forward time frame. I spent so much time here, and this is the inversion fair value gap that I see can be used to be traded once the body successfully closed below it. Here on the forward time frame. Okay, if this is your first time, you can subscribe, and so you can get more information like this. If you've been watching for a while, and also if you're a first time, you can just give a thumbs up if you like the video. So this level now, I'll tell you what it means. 2 weeks ago, tail upper quadrant level, I told you, like quadrant is 4, right? The upper 25%. LLOD for HP, sell side delivery. LLOD means last line of defense. And HP is not a laptop, it's high probability. This is my abbreviation, you understand? So if you've been following me for when you say HP, it's high probability. When you see LNOD, it means last line of defense. I used to reiterate it every time because there can be someone watching this for the very first time. So 2 weeks ago, the tail upper quadrant level, also called the 25% level, it's my last line of defense for high probability sell side delivery. Now, we should be going sell side. And if the sell side is really going to be highly probable, price should never come to this 1.27043. If it ever does that, it should immediately reject. Look what I just said? Because there's an inefficiency up above this candle. If I take this out now, you can see there's an inefficiency here. Okay? I don't have business. I don't want price to do that because we should really go down. Why? See this up close candle. If it's going that, then this is like showing you like a breaker, bullish one. And it's not what I want to see. This I want to act as a bearish order block. Wow. Yes. So how far do you want to see price retrace? Then you can capture a short entry to be able to trade the week range and whatever. So this inefficiency is a little bit annoying to my eye here on the 4-hour time frame. Let me take it out. That's the daily one. And here we'll have, what's this also? 60 minutes. Mind your business. So this I actually set the inefficiency to be on their various time frames so they won't give me so much of stress. So here is a CB, another CB here. You can see this is separation between this candle's low and this candle high. Sell side inefficiency. Let me tell you, look at that level. It's a 4-hour what? A 4-hour CB, okay? Which is just below what? A last up close candle, which makes it what? A change in state of delivery, which validates this as a bearish order block. You can rewind it to hear that. Now, price should go up to premium and then sell side. It doesn't like, this is like, okay, good sell side for me. You can be comfortable here on your own. You can just be comfortable here. You see this low here. Here, it's easy. You can easily get this low here. Here, this low, this one, yeah. At 1.25072. That's easy. But there's an inefficiency here. That's why I actually like this inefficiency and this sell side layer at 1.24873. This inefficiency, which is like that balanced price range I told you, remember, at the start of this video. That's why I actually like that level. But it doesn't have to get there for you to be profitable. On the 1-hour time frame is where I'll do the most of the job now. Here you can see, I just walked you through to be able to know why I'm bearish. Not that I'll just start from here and just be talking. No, I want you to know the why. You can see how many consecutive up close candles. 1, 2, 3, 4, 5, 6. All these candles are order block. The midpoint is what you see in like a green line here, a green trend line. That's a 60-minute bearish order block main threshold. The main point of an order block, breaker block, medication block are called main threshold. But inefficiency and wicks are consequential encroachment. So that's the main threshold. And you can see, look very closely. You can see 21st June, new week opening gap high and low. They are almost essential level. Like they are almost the same level. They are very key level for price to want to retrace. And look closely to the left. What do you see again? A sell side imbalance, buy side inefficiency that was overlapped here. You see that? So if price is returning here Monday, Tuesday, you want to see this level prevent price from going up into this level. It might actually do that, but for high probability, you should just do in here because look in here. This is an up close candle here. We never got a reprice in here. This was like a breakaway gap. It went in here a little bit and we fell lower and lower. This high ran above this relative equal highs here. So to me, I think this high has done enough job. This is like an order block. If this fails, okay, permit it to come into this inefficiency, but never tolerate anything of a body closure above 1.27043. That's the last line of defense. Once you see a body overlay that on a 4-hour basis, you want to sit still. There are mocks, which is beyond the scope of this study right now, but you don't want to see that for high probability sell side delivering. So that's the level you want to, about this level 1.26459. That's the bearish order block main threshold, and you want to see once price retracing to that level, that's a premium. So it will form what I told you, which is the open, high, low, and close, the high of the week. I'm not trying to tell you this is exact, but around the level it can form here for high probability one. But it might actually even come as far as here, which I don't want to see, but it can do that. You can permit that because telling you from the monthly time frame, we haven't closed below that tail constraint encroachment yet. So it can still want to do this kind of playing around. But in as much that tail constraint encroachment gets it overlapping, then you begin to demand high precision. That's when I'll say, I really want to see it close here. I don't want to see it getting here. But it has not done that. That's why I say I'm giving an allowance for here. Even though I don't want it, I'm giving an allowance for there. And I want to see how price reacts there. Not that it should go in there and overlaps it. Okay, let me just make a sign for you to see. Now, the ideal is price should come in here. here, okay, and we should want to see going down. It's not going to be straight up like it's going to be, the way price delivers, but you can see otherwise. Price might retrace a little bit, okay, and still go up. That means it has disrespected this up close candle and come into this inefficiency, okay. What you want to see from this inefficiency is what? Immediate what? I dropped the cursor. Let's pick it again. You want to see what? An immediate rejection, not boom, an overlapsing. No, you want to see something like this. Then whether it can return to the low or the midpoint based on how price delivered in that inefficiency, and then you want to see something like price you want to go lower like this. It doesn't have to be at once, but you want to see it want to show willingness to go lower. So this is not a pattern. I've always said it. I just explain, for someone who doesn't understand all what I've been talking about, this is what it means in visual format. Okay, so hopefully this was impactful or insightful to someone. We'll move to the European dollar. Here on the European dollar, on the daily time frame, let me just walk you through the monthly time frame and I'll be more faster than the British pound. The monthly time frame of November did the same signature. It went in, even though it was looking promising at first, but it went in. And this was the low here. The low of this candle here in December is what? 1.0, remember top left corner, 1.041, 4533. This cash encroachment is what? 1.04553. So this actually touched the cash encroachment, but it's yet to close below it. You understand? The British pound didn't touch it, but it's almost about closing below it. Now to the weekly time frame. Here, I thought you were still long, okay? Here is the inefficiency that is similar to that one on the British pound. Look in here. Body came in here just once. Just once. This one didn't make it. This one didn't make it. What does it form? A swing high. A swing high is a candle with a high, with a lower low to the left and right of it. That is, it's a candle high like this and has a lower high to the left of it and a lower high to the right of it. Not lower low, sorry. A lower high to the left of it and a lower high to the right of it. That's a swing high. So it formed a swing high, and that high was the only one that successfully entered this inefficiency. You see that? That's weakness. And watch very closely. The midpoint of this candle still about this level. The body closed below it. This is the midpoint. Let me just show you. I have it annotated. Yeah, that's the midpoint. Cash encroachment. You can see that. Body closed below it. The midpoint is 1.05142, and the closing price of previous week was 1.05029. You can see that it's lower. It's closed below it, which is telling you what? Heaviness, bearishness. Okay, so where are we going to be drawing to? This is an inefficiency. I think I should have told you on the monthly time frame, so you can see it. You can see that inefficiency there. That's a BC. You can see that. You can see that. So it's a little bit different from that of the British pound. That's like a balanced price range, but still, it's still an inefficiency. That's a draw on liquidity. These lows are too clean. They are just too clean. Look at this low here, 1.03330. This low here at what? 1.03332. Just like the low is just too relative. They're too smooth. Price will want to draw in there. Okay, that's a draw on liquidity because price has taken this low out. You can see that, and it's retraced and still close below the midpoint of this candle still. That's interpreting order flow. I'm not looking at an RSI, a MACD, DOM. I'm not doing any of that, okay? I'm just reading what price is giving as instruction to the daily time frame. Very important. Remember to subscribe if you haven't, so you can, get more information like this. Do you know how many fair value gaps can you see here? Like I'm giving you just a few seconds. From, just on this chart now, okay? Everything, how many fair value gaps have you seen? Somebody will be like, none. Well, I see two. Yeah, two. Let me tell you the first one. It's not so important, but I'll show you what it is. Here's the first one. Look in here. This candle's low. This candle high. There's a gap there. Do you see that? Oh. Do you see that? This way. You can see that? There's a gap. Can you see that? That's a fair value gap. That's one. Then the second one, which is the most important to me, which I want to really emphasize in this video, is the one I'll be showing you. You just get out of here. Is this one. I outlined it already, but I made it faded because I know if I made it obvious, when I ask that question, anyone easily would have seen it. So here you go. That's the fair value gap. You can see that. What makes it a fair value gap? When you see a candle that has a volume imbalance, like there's a gap lower, this is a new week opening gap. Closing price of Friday, opening price of Monday. You can see that. That's a new week opening gap. The high and opening price. Sorry, the closing price of this candle and the opening price of this candle. That's a gap lower. But the inefficiency is from the closing price, because it's a gap, then to the high of this candle. That's the fair value gap. What happened? Price overlapped it at first, then came in lower. Then this will be treated as what? You guessed it? Exactly. As an inversion fair value gap, a bearish one. So from this level, forget about that first fair value gap. This one here, just there's no fair value gap. This is telling you what? This is a high resistance liquidity run. Wow. Yes. This is not when you want to be trading aggressively. No, you want to be very calm in this kind of condition. Okay? You want to be very conservative to the core. You want to be conservative. So it's very, 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 like, it's not, you don't see smooth and easy price run. You might see some of you, one or two, but it's something that can really eat up your account. So this is times when you want to sit still and wait for market to get what? Smoother, a little bit smoother. Okay? You want to see a little bit smooth movement. Now, the draw on liquidity for the European dollar is 1.04251. This sell side liquidity here. Yeah. That low is a draw on liquidity. Okay? And this inefficiency, and I told you this relatively equal lows is just too smooth. I took it out again. Let me make it obvious here. Visible on the daily and the 4-hour time frame. Back to the day time frame. This is a low, like it's just too clean. So price might want to go in there. Now, before price go in there, if you want to see the high of the week, where do you want to see it format? The 4-hour time frame. Feel free to drop your questions. If you have a suggestion you want to make, I'm open to it. Feel free to drop your suggestions, okay? So if you hear that sound, it's just the wind blowing across the door or something to that effect. So this level here is the remaining unfilled portion of a 4-hour BC. You can see this inefficiency here. This inefficiency here is from this low to this high, but this candle already traded into it here. Okay, here. Let me see. This, what is going on? Okay, what is that noise? Sorry for that. We traded into it here. We wicked, then body closed about this level. So price has delivered to this level, but this side is still void of, like, there's a little bit of delivery there, but not real like candle closing on this time frame there. So that level will be, seems like, okay, price is one on a drop price. That's why I name it what? The remaining portion of unfilled 4-hour BC. That's the remaining unfilled portion. That's a draw on liquidity coupled with this what? Sell side liquidity at 1.04251. Now, unlike the British pound, the European dollar tends and will tend to want to retrace deeper because of, look at how the price is. How many fair value gaps do you see? Like, let's go to the British pound for you to see. Do you see how it fell from this point here? 1 a.m. See how it fell down. Let's go to 1 a.m. on the European dollar Thursday. What do you see? Like, look at it. Do you see any falling down from 1 a.m.? Just stupid, right? So price is going to want to come to this buy side liquidity at 1.05396, coupled with that inversion fair value gap I just showed you when I asked you, do you see any inefficiency? That's inefficiency, the only one in that little price factor, with an exception of the one I initially showed you. So a lot of you might not see that, and if you appreciate that, you can comment, give us a thumbs up, and that's it. So here we went. I want to see it do something like this. Let me just make it layman understandable. Price might want to open. It's free. Like, I don't care if it goes down or up on Sunday. But before we're gonna see the week going through, it can actually even go low on Sunday. Then it just print higher on Monday. Then Monday, Tuesday takes the high of Monday, right? And go into this level, buy side liquidity, this inefficiency. Then I don't want to see something like this. No. I want to see it showing weakness to want to what? To want to retrace. Then if it begins to show retracement within your time window, if you're using the 2022 model, whatever entry you're using, entry mechanism, it doesn't matter whatever mechanism you're using to enter the trade, you just want to engage there if everything is in line with your with your buyers. So I want to see price gravitate down. So don't take that as any pattern. I just drew it for understanding. So that's this high that is too relative. Look at this high. It's just they're too close proximity, and price didn't fail to get here, fail to get there here. That's just weakness. So I want to see price join to this inefficiency here. So that's that for the yeah, something, a final takeaway here for those who stay this long. Here is your trade. I'm gonna find something. Yeah, this what usually, ideally, this should be what a bullish breaker, right? This is also an upwards candle here, but I like how these candles close up. So this what is what like a bullish breaker. So a 60 minutes bullish breaker. Below it is a kind of balanced price range. So BPR is balanced price range, not blood pressure. Okay, balanced price range. I anticipate a failure for both, hence an inversion, which means this ideally should act as a breaker if price come in here, and it should do what, send price higher. But this time around, I anticipate a failure. It can retrace a little bit and fail. Once it fails, I anticipate what, an inversion, a return to it. Whatever time it does, a return to it. A return to it. I'm not getting. If it returns to it, then what? It should send price even lower. So that's a signature I'm anticipating here in price. So you will not be treating this as a normal. What is making noise in the basement now? Sorry for the noise. I'll round up the video soon. Okay. So you will not be using this as a normal bullish breaker. It can do that short term. It can actually, okay, let's do something very possible. Something very possible is that on Sunday we can open, trade into here on Sunday. Very possible. Then send it higher to take this buy side I told you. Remember that buy side liquidity? This. Remember? It can come in here and take out. It doesn't have to do it on a straight shot. It can be very slow and just eventually get in there. That buy side liquidity. Like these highs are too clean. And coupled with what, this inefficiency we are in, this level, okay? And then you begin to see the breakdown gradually. Then we see the sell side delivery as anticipated. So you can treat that way. Very experienced people, I don't trade on Sunday. If you're very experienced on Monday, Tuesday, if you see something good, you can want to try to go along if it does this signature. But Sunday can just open, boom, take this high out and just, that's it. That's the high of the week. We're done. We keep going now. So don't just, take it hook, line, and sinker. You have to, I'll suggest you wait for more information by price before you just engage. So I think that will be all for now. This is the 15 minutes time frame. Okay, this is also a London session buy side liquidity. There's so much high that are looking very probable for a draw on liquidity. Okay, price might want to come in there. It's just too clean. Look at these highs. Look at this high. Look at this high. Let's go to the British pound in just a minute, second. You can see that. Do you see that kind of a high? This high right here at 21, that's 9 p.m. It was taken out by this high here at what? At 2:15 a.m. Now look at 2:15 a.m. here on the European dollar. Look at that high. It failed to take out the 9 p.m. high here. 9 p.m. Do you see that? It failed, and it's like a London session sales buy side delivery liquidity. So it failed to go up. So I think it might want to do that. It doesn't mean it has to do that, but it might want to do that. So you give an allowance and a tolerance for that. And I'll bring the video to an end. Let me see if there's anything I want to communicate here on the NASDAQ. Yeah, my pre-week analysis before this week open, I told you something I want to see on NASDAQ, and it actually happened. So I want to show you here. You can watch the video and, well, probably let me just, listen for a few seconds, But if you're having an all-time market, that is a market that is making a new high, with nothing at the left of it. Like now, let's say BTC was about hitting 100,000. It hasn't done that since the history of BTC. I think about 2008. That's an all-time high. How do you trade those all-time high? Because I won't try to wrestle the underlying narrative. December is when people, cash in their money. Those who invested in the stocks, they want to take in some money and, whatever they want to do for the end of the year, they want to take out the money. So you might not see very nice price delivery. But if you want to insist on trading, there's no need of looking for sell side delivery, because we already consolidated here. We ranged after fulfilling this buy side and we expanded. So you just be looking for this, just a simple, straight to the point, a displacement to a discount level, or taking out a short-term low as a sell side liquidity. So what does that look like? Look at this low here, okay, at 20,424.75. This low here at what? 21,000 here, 444.25. They are almost the same thing. That immediately makes it becomes what? A relative equal low, and it will act as what? A draw on liquidity. So this low here, I'm just giving you what you might expect to see. So 21,424.75. Let me make that level there. 21,424.75. So that's the sell side liquidity. I just annotated it with a horizontal line. So it's delineated here now as relatively equal lows. You want to see price. If price, you don't demand that, okay? But if price does that, and how will you know? There are certain things I just want to make the video ended as soon as possible. So once price is going down, it should see a retracement because we've been pressing up higher. Look at this inefficiency. You watch closely. Does this inefficiency get violated? How do you know that the low of this inefficiency, if once price trade below that low, you want to sit still and wait. Now look left, there's a 2 down close candle, consecutive down close candle. This is an order block because an order block validated is actually having a change in state of delivery depicted by a fair value gap. So if you see a bullish order block, a change in state of delivery is actually like a BC, which is a buy side imbalance, sell side inefficiency. That's what validates it as a not okay down close candle. No, not engulfing candle. That's not what is it. Once you see that change in state of delivery, it's an order block. So if this is a real order block, even if this inefficiency failed, its main threshold should support price, starting from the opening price to its main threshold. If it fails to support price, which is, to me, I think there should be more of this sell side delivered. It fails and comes to this sell side, you wait for more information. How does it act? Does it take the sell side out as a total soup, which is a liquidity engaged, or does it act as a displacement to send price lower? If it does as a total soup, which is what I'm expecting, then you want to see what a displacement, whatever model you use, whatever setup you use, it doesn't matter. You look for your buy and you follow your model, targeting the next high. Okay, that's how I know to trade all-time highs. So you just wait for, you don't try to, okay, I'll keep selling. Don't do that. You will keep stopping. You get stopped out multiple times and you will lose your account. You wait for a displacement. Don't arm wrestle the underlying buyers. Once you wait for a displacement, which would be to a downside this time around, it will take a short-term low. And I told you the one that I like, which is this relatively equal lows at 21,424.75. Then you wait for a displacement to target buy-side liquidity. And the easiest low-hanging fruit buy-side liquidity is here at 21,669.25. I'll just annotate this level and bring the video to a closure. 21,699.25. So that level at 21,699.25 is the buy side drawn liquidity. The same narrative you applied for the E-mini S&P. You just wait for a displacement to sell side. Hello, welcome back. You heard that yourself, right? So that's on a 1 hour time frame, which is here. We had this sell side liquidity, and before this week opened, this is Friday, Tuesday, Monday, Sunday, right here, this was how price was. So I told you that price, like it was something, all this Monday hasn't done. This was like Friday here. Price was this way. So I told you, if you want to come down to this relative equal lows at 21,424.75. Listen, I tell you, like, listen, this is a playback of that video. I'm just giving you what you might expect to see. So 21,424.75. Let me just annotated it with a horizontal line. So it's denominated here now as relative equal lows. You hear that yourself, right? 21,424.75. And what happened? This, I didn't delete this. I might have deleted it, but we do it. I didn't edit like the pattern I joined. You can see it's the same thing. And we came in here, took out sell side. Then what happened? Look at that. I was like, oh, it fell lower. Nope. What happened? Went to buy side liquidity right away. You can see that. So it was told to you, it happened here, and I outlined it on my X. If you are following me on Twitter, you will have seen it. I told you the very day it did that, I was there a day before that day. I told you should anticipate this relative equal loss at 424.75 to 1,424.75. And we had the sell side, that was the low of the week, and it formed here on Tuesday, right? And we went up, and that was it. We delivered buy side liquidity. So that was what I anticipated for the NASDAQ, and it delivered. So I don't know, let me look if I have any insight to give to anyone who wants to trade that. We're in a hot all-time high, and I told you if you want to know how to trade all-time high, I'll drop the link to the video. I'll drop the minute timer if I can get it. Let me just tell you, if you want to trade all-time high, just wait for a decline to a discount. Like I just showed you on that previous video. Go and watch it. I'll tell you, you can check it in the timeline. If I can get the timestamp, I'll just put it in the description of this video. You can go in there. I told you why it should go to that sell side liquidity and go up. That's how you trade market trading in an all-time high. Okay, I explained it in that video, so you can watch it. And for E-mini S&P, there's not much to cover, and to preserve and to curtail the length of this video, I think I'll be ending it. Yeah, look at something here, 61,041.25. This low is too tempting. So this is the low sell side liquidity here at 6,039.75. That's 3 ticks. Let me see the 4 time frame to be looking a little bit more better. It's not even visible on that time frame. I make it visible. So I'm anticipating price to want to draw to that level as a sell side liquidity if you want to go up, because I don't want to underline wrestle the underlying price narrative, which is bullish. So price might want to join to the sell side. I don't think I need to be joining any marks. Do you want me to do that? Well, somebody might be saying yes, somebody will be like no, but for completeness sake, something like this, okay, then it will not displace, depending on how you see it. Once it overlaps something like this up close candle, if it overlaps these two up close candles successfully, then you can treat that as a breaker. And then what? Look at this high, look at this high, look at this high, look at that high. You see that? And then something like this. So where's the buy side draw on liquidity? It doesn't have to do that this coming week, okay? This high right here at 6,111, big figure right here. So that's the buy side draw on liquidity. Buy side liquidity. So that's the buy side liquidity at that level. 6,111. I think that's the highest high about that level. Yes. So buy side liquidity is at that level. That's it. So you want to see this kind of don't go in there and say, okay, since NQ did that pattern, this should definitely, it can do it. But don't go and follow your model. But try to test this and look at it. If it happens, then fine, well, good. I helped you, I gave you my insight. So hopefully you find this video impactful. I wish you a great trading week. If you're watching the weekend, enjoy your weekend. Whenever time you're watching it, enjoy your time. And remember to subscribe, drop your questions, and feel free to communicate your thoughts. If you want me to improve on anything, you can let me know also, okay? So share it to your colleagues. There might be someone like, wow, this video will help my friend. Let me share it to them, okay? They might really need this. Some people, we should help each other in this community. It might be a crutch to someone to support him in his understanding or her. So share it to everybody. As I give it to you free, give it free. Let them know, and everybody should grow and become better trader. I think that's why you're watching this, to become better in trading. So hopefully you find this video impactful. Sorry for all the background noises in the basement, up and down the store. Just sorry for that. Okay, and thank you all. Do well. Be safe.